think the flaw with accounting standards really is that you never recognize intangibles in the balance sheet because you're not allowed to. No, particularly like internally generated goodwill or whatever. So just because there's no assets on the balance sheet doesn't mean there's no value in the company. It's because what you're building is inherently code, essentially, or code and customer base, which are not quantified into a number yet, could be into the future. So massive flaw. And nowadays, it's all the valuable companies are in technology or digital assets. And so the CapEx recognized in the balance sheet is declining over time, oppositely correlated with value, because a lot of the value is in data, basically. So inherent flaw with accounting, and that's why sometimes the financial statements themselves are also deceiving because of accounting quirks. We can't quantify everything because you can't attribute everything, and nor should you, I think. That sounds probably weird coming from an accountant who would always want to measure everything, right? I think it's almost like the opposite. And to me, that used to be me until I realized you start probably being more clued on and learning how things are tracked and measured. You realize it's all made up. ROAS was never really accurate ever. And the whole thing of attribution, we can go down the rabbit hole on that if you wanted to, but it's just made up. So I think in terms of ROI, I think now that learning more about marketing and working with our clients who are very marketing focused, you appreciate that. There's bets we need to make, and it's a content thing. People think about accountants, they think about tight ass cost cutting. So when you speak to your accountant about hey, I'm not making as much money as I thought. How do I improve my profit, right? And the default response by most kind of accountants is you're going to reduce the costs. It's obvious, right? Yeah. So you go through your line by line item in your expense account. You're like, what's this? That's $10. You don't need that. What's this thing? Don't need that. And you just and it's just a very penny pinching mentality. And I think that's probably the stereotype of many accountants. Is you're tight ass penny pinching people memes. But I think there's a common saying that we always kind of say in preaching, and also in the book. That there's a passage, I don't know who said it, I think it's been incorrectly said by Warren Buffett or someone, I don't think it's true. Anyway, it's like revenue is vanity, profit is sanity, but cash is reality. And I think that's true, it's honest, and applies to every scenario. That revenue is a vanity metric, as we always talk about. We can't quantify everything because you can't attribute everything, and nor should you, I think. There's multi touch points in every brand and relationship that you have, and it's really hard to measure and track, but you should allocate a budget to it, right? And I think it comes back to the numbers. Is that's cool. How we think about ROI of marketing is, and particularly e-commerce brands, for example, you look at MER or marketing or media efficiency ratio. You look at how much you're spending versus what is the revenue, and so long as that percent is within the bucket of what we've allocated as a budget, which means, and we set that budget based on profit goals or cash flow goals to make sure we can still turn the engine, that's okay. So however you spend that budget is up to you. That's up to the marketing team and how you guys do it. But so long as we are within that kind of those rails, we're all good, basically. So that's how we think about it, because we do acknowledge that marketing is an investment, and like all good things, it takes time. If you're looking for scale and growth, the growth at all costs, it's GMV is the biggest thing. Like Uber's of the world, or Airbnb, they're probably looking at purely GMV. It's how much dollars are being transacted through our platform, and that's the North Star metric. I think for a small business owner, it might be just net profit. It's how much profit am I making per month for things. So it really does depend. I'm always of the approach of trying to add a few. We have SBO, our company, we have our North Star is ARPA or ARPU. And I've fallen into this trap a few times where, we actually lost a client because of this sort of thing. You were as a startup, kind of real estate agency, consultancy business, and, they had no money, they asked the parents to chip in some cash, $200K of life savings. And then I was and they just started burning tens of thousands of dollars on Facebook ads and engage a content agency, and they were burning dollars. I'm dude, you should be profitable from day one. You're a consultancy. There's no R&D. God. But then, 18 months later, bam, they just found it, and the thing worked, and they're crushing it. And it was all attributed to the work that they did early on. And so I think that if this is again hard with our profession sometimes, because if you're too into the weeds, if you're too into the detail, the books, you get caught up in that world where you're not piecing the story together. until you kind of step back in that context. I think that's a really important thing about numbers, is that you can kind of present any story you want with data. Like you really need to add narrative to the information. Exactly. Yeah, it can be fake. Accounting can be super misleading. So you really need to add narrative to what's trying to be achieved. And I think that works in the opposite way as well, where you can manipulate sometimes or stretch the truth. There's a lot of tech companies that have crazy valuations because they've got this, what's your DCF look like, or discounted cash flow? It's like, oh, well, here's our TAM, here's our estimated users, and you can just make the spreadsheet as magical as you want and to justify whatever price. So I think you realize, and this is what we realize, the difference between kind of immature and mature finance people or accountants, that you can see the difference. You can kind of you can craft the narrative in the right way, but you can also see through bullshit just through experience.